Headlines like Saudi Arabia considers accepting yuan for oil and Russia and China ditch dollar in trade are more than isolated events. They're signals of a global shift. When you connect the dots, a dramatic picture emerges. The world is quietly building a new financial system to challenge the US dollar's dominance. China is leading this revolution, methodically positioning the yuan at the center of global finance to reduce its vulnerability to American economic power. The US has long used the dollar's reserve status as a tool of foreign policy, but China wants true monetary independence. This isn't just about China's ambition, it's also about the world's growing doubts about the dollar. Years of US debt, political polarization, and aggressive sanctions have pushed countries to seek alternatives, not out of hostility, but for stability. Nations are hedging their bets, diversifying their financial relationships, and preparing for a future where no single country holds all the cards. Across continents, the yuan is making inroads through loans, new payment systems, and strategic alliances. From Middle Eastern oil to South American agriculture, the yuan's reach is expanding. This series will explore how China is building its alternative system, why countries are joining, and what it means for the global economy. The era of unquestioned dollar supremacy is ending. A new, more complex financial world is taking its place. The US dollar has long been the backbone of global trade, but its foundation is eroding. The yuan's share of global payments is rising, now among the top 5 most used currencies. China, the largest trading partner for over 120 countries, is leveraging its position to promote the yuan. Russia, once reliant on dollars for trade with China, now settles most of it in yuan and rubles, a direct response to Western sanctions. Brazil and China now settle over $150 billion in trade directly in their own currencies, bypassing the dollar. Argentina, facing a dollar shortage, pays for Chinese imports in yuan. These moves aren't isolated, they're part of a global pattern. Countries are choosing yuan to reduce costs and currency risk, especially when China is their main trading partner. Even central banks are slowly diversifying away from the dollar, with the yuan gaining ground. As China opens its markets and proves the yuan's stability, its role in global reserves will only grow. The shift is slow, but undeniable. For decades, oil was priced exclusively in dollars, creating constant global demand for the greenback. China, the world's top oil importer, sees this as a vulnerability and is pushing for the petro-yuan. Russia now sells oil to China in yuan, bypassing the dollar entirely. Saudi Arabia, a pillar of the petrodollar system, is openly considering pricing some oil sales to China in yuan, a seismic shift. Beyond oil, China is using its buying power to settle commodity trades in yuan, from Brazilian soybeans to African minerals. The Shanghai International Energy Exchange offers yuan-denominated oil futures, giving producers a direct alternative to dollar benchmarks. This isn't just about currency, it's about reshaping global supply chains. When countries accept yuan for exports, they can use it to buy Chinese goods, creating a closed-loop system outside the dollar. The petro-yuan and commodity yuan are tools for building a new, China-centric economic order. One transaction at a time, the old rules are being rewritten. A currency's power depends on the infrastructure behind it. The US dollar dominates thanks to networks like SWIFT and New York clearinghouses. China is building its own rails, starting with the Cross-Border Interbank Payment System, or CIPS, a yuan-based alternative to SWIFT. CIPS lets international banks transact in yuan without touching the US system, appealing to countries wary of sanctions. Every new bank joining CIPS strengthens this alternative network. China has also established over 40 currency swap lines, letting partner central banks access yuan directly. This provides a safety net for countries short on dollars, promoting yuan use and reducing reliance on the US Federal Reserve. The digital yuan, or ECNY, is China's leap into programmable cross-border payments, potentially outside the reach of US oversight. Imagine instant trade settlements in digital yuan, with no need for intermediary banks. By building CIPS, swap lines, and the digital yuan, China is creating a complete independent financial architecture. The foundation for a new global system is being laid. The rise of a global reserve currency is usually slow, but China is accelerating the process. Unlike the dollar's organic ascent, the yuan's rise is a deliberate, state-driven project. Globalization and technology let China fast-track the yuan's internationalization through trade deals, infrastructure, and new financial platforms. China is compressing a process that took the US 70 years into just a few decades. It's following the American playbook, building a petro-yuan, opening bond markets and creating institutions like the AIIB. But this rapid rise is fragile. The dollar's power rests on trust, rule of law, and open markets, which China still lacks. Capital controls and government intervention make foreign investors cautious. The yuan is growing fast in trade, but as a safe haven reserve, it still lags behind. China is winning the race for transactional use, but the race for global trust is a marathon, not a sprint. The world is watching to see if China can close that gap. The world's move away from the dollar is driven as much by US missteps as by China's rise. America's soaring debt, now over $34 trillion, raises doubts about the dollar's long-term value. Foreign creditors worry the US might one day inflate its way out of debt, devaluing their holdings. The US has weaponized the dollar, using sanctions to cut countries off from global finance. This makes other nations nervous. They want alternatives to avoid being vulnerable to US policy. Political dysfunction in Washington, like debt ceiling standoffs, further erodes trust in the dollar. Investors crave stability, but US politics now seem unpredictable. Meanwhile, the world is becoming more multipolar, with the US share of global GDP shrinking. The dollar's dominance is a legacy of a unipolar era that's ending. Countries want a financial system that reflects today's distributed economic power. The shift isn't just a reaction to US policy, it's a logical adaptation to a changing world. The dollar's role is being redefined. The yuan's rise is real when you look at what countries are actually doing. Russia, cut off by Western sanctions, now relies on the yuan for trade and reserves, a live experiment in de-dollarization. Saudi Arabia, long a pillar of the petrodollar, is warming to the yuan, especially for oil sales to China. This gives Riyadh leverage with both Beijing and Washington, signaling a more multipolar energy market. Brazil, China's top trading partner in South America, now settles massive trade flows in yuan, saving on costs and reducing dollar risk. For Brazil, it's smart business, not ideology. Even in Europe, countries like Hungary are promoting the yuan to attract Chinese investment. Each country has its own reasons: necessity, strategy, efficiency. But together, they're accelerating the yuan's global journey. The coalition is diverse, but the trend is clear. The yuan is moving from theory to reality. The drive to build a parallel financial order is fueled by the desire to escape US sanctions. America's control over the dollar-based system lets it cut off countries from the global economy at will. Sanctions on Iran and Russia showed the world how vulnerable they are to US financial power. China's CIPS payment system and yuan-based trade offer an alternative, transactions that never touch the US system. For some countries, this is economic survival. For others, it's strategic autonomy. Even those not currently targeted by sanctions want insurance against future US pressure. The digital yuan could make this even more robust, enabling private, instant, and sanctions-proof transactions. International trade could soon be settled directly between central banks, outside US oversight. The ECNY is more than new money. It's a foundation for a truly independent global financial system. The balance of economic power is shifting. The world is building options. The world is moving away from a unipolar, dollar-centered system. The yuan won't simply replace the dollar overnight. China's system lacks the trust and openness of the US. Instead, we're heading for a multipolar currency world. The dollar will remain important, but it will be one of several major currencies. The global system may split into currency blocks: dollar, euro, and a growing yuan block. Major transactions will be settled in the dominant partner's currency. For the US, this means losing the exorbitant privilege of easy borrowing and global influence. For others, it means more choice and less vulnerability to any single nation's policies. But a multipolar system could also be less stable, with new sources of tension between currency blocks. The transition won't be seamless, but it's underway. The era of a single financial superpower is ending. A new, more competitive world is emerging.